this is how I expect you to read the question during an exam. Okay. You have the question in front of you, right? Just read always, this is a 50-mark question. The marks will always be mentioned at the very top, okay? Which you have like over here, 50 marks, right? Now it says you are an audit manager in Davies and Company, responsible for the audit of Conolly Company, a listed company operating in the pharmaceutical industry. You are planning the audit of the financial statements for the year ending 31st December 20X4. So always highlight the year end, always highlight whether the company is a listed company or not, always highlight what industry it operates in. Okay, these are crucial information, right? This is crucial information over here. You are provided with the following exhibits, and remember one thing, guys, that you are planning the audit of financial statements, not executing it, not finalize. You're not in the finalization stage, you're not in the reporting stage, you're planning the very initial stage. Okay, you are provided with the following exhibits: an email which you have received from Ali Stone, the audit engagement partner; background information about the company's activities, all right, minutes of meeting between Ali Stone and finance director Maggie Ram; key financial information, comparative financial information. So if you have the key financial information, comparative financial information, that means you have numbers, and you can make use of the numbers to identify risks, especially risk of material misstatement. Okay. Request by the audit committee for additional services. All right, that's the last part. Now, what the requirement says: respond to the instructions in the email from the audit engagement partner. Note the split of the mark allocation is shown in the partner's email. Okay. Professional marks will be awarded for the presentation and logical flow of the briefing notes. So that's 4 free marks. Only if you have you have a sense of presentation and logical flow. You've given a sense of presentation and logical flow to your answer. You will be able to get these 4 marks. Okay. Exhibit 1 is the most important exhibit. Why? Because it tells us about all the requirements that we need to cater. All right. And if you, let's say, somewhere in the middle, forget what exhibit relates to which part of the question or the information, you can always go back and look at the background or the basic information. Okay. So exhibit 1 says, you need to start planning the audit of Conolly Company. And to help with this, I have provided you with some relevant information. I held a meeting yesterday with the company's finance director, and we discussed a number of issues which will impact on the audit planning. I also spoke with a representative from the audit committee regarding a request for additional service Conolly Company would like a firm to provide. Using the information provided, I require you to prepare briefing notes for my use, in which you evaluate the business risks faced by Conolly Company for 12 marks. Evaluate the risks of material misstatement to be considered when planning the audit, 20 marks. Now, when you have such significant numbers coming out of just 2 parts, which is 32 marks out of the entire 50-mark question, and from that, within that 50 marks, 4 marks are like, I treat them as free marks only if you know how to present your answer. So 32 out of 46, that's a huge percentage coming out of just 2 requirements, right? Yes. Whenever you look at such a requirement, always there and then identify the number of points that you have to find out. For 12 marks, how many points would you like to go with? Minimum. Maximum could be anything. Minimum, how many points would you like to go with? Just look at the marks. Forget about the scenario. Considering the marks, how many points would you like to go with?
6 points.
Yes.
6 points.
Minimum 6. All right. Minimum 6 points. Okay. What about the second requirement? Evaluate the risks of material misstatement to be considered in planning the audit. How many points? I would like to go with 8 points. all right, with a ratio of 2.5 marks per point. Why? I have my own calculation. Okay. If I get 8 solid points, I'll be able to score at least, even if you take a ratio of 2 marks per point, I'll be able to score 16, which is well above the passing marks of 10. So I have a significant margin of safety, considering that I have a time constraint as well. Okay. So in a professional paper, especially in a paper like this, it's a killer paper. Okay. Don't take it. Don't think that it's an easy paper. It's one of the most technical papers there is. You have to make sure that you're managing your time effectively. For 12 marks, even if you write 5 points, you're good to go. All right. 5 points is more than enough. But that does not mean 5 points out of that, 3 points here and there. No. 5 solid points. 5 points, well explained, well identified. Okay. So for me,
Yes.
obviously, during an exam, I don't want to overburden myself because this is just the first question. I have 2 more questions to attempt. If I overburden myself in just the first question, do you think I'll have the energy and the strength to attempt the remaining 2 questions, which, by the way, have the same weightage together? They have the same weightage as this question, right? The remaining 2 questions are for 25 marks each. That means 50 marks. So both of those questions have the same weightage as this question, right? So would it be, would I do justice to those questions in section B if I give all my energy to section A and I have nothing left for section B? No, right? So the point is that you need to balance out your approach. Make sure that you're not overdoing it, and also make sure that you have enough points to get at least passing marks with a good margin of safety in each requirement, not in each question, in each requirement. All right. I'm not gonna, guys, can you please mute yourselves? I'm getting some background noise. If you have a question, you can unmute. All right. Now, we're just looking at part A and B right now. Background information, let's look at it. Let's see if we can identify any business risks first. Okay. Conolly Company is a pharmaceutical company developing drugs to be licensed for use around the world. Products include medicines such as tablets and medical gels and creams. Some drugs are sold over the counter at pharmacy stores, while others can only be prescribed for use by a doctor. The market is very competitive, encouraging rapid product innovation. New products are continually in development and improvements are made to existing formulations. 4 new drugs are in the research and development phase. Drugs have to meet very stringent regulatory requirements prior to being licensed for production and sale. Research and development involves human clinical trials, the results of which are scrutinized by the licensing authorities. It is common in the industry for patents to be acquired for new drugs, and patent rights are rigorously defended, sometimes resulting in legal action against potential infringement. Once launched, products are heavily advertised to support the company's brand names. In some countries, television advertising is not allowed for prescription drugs. The success of Conolly Company relies on the retention of highly skilled scientists to develop new medicines. Most scientific personnel have worked for Conolly Company for a number of years, and staff turnover has traditionally been low. However, as competition within the industry has increased, staff retention has become more difficult, with people leaving to join rival companies offering large salaries, and enhanced benefits. Technically, if this was my exam, like, right, if I was, or if I were to be in an exam situation right now, I wouldn't have read this paragraph the way I just did. I would have probably stopped after every one or two lines to figure out whether there's a point which is making sense. All right. This is very important. Now, since I already gave you time to read all this information, do you have any points from this paragraph? Do you think, is there any business risk coming out of this paragraph?
From my side, I have research and development costs that needs to be scrutinized in case they're overstated or understated and wrongly classified.
You're starting from a business risk, concluding with a risk of material misstatement. Requirement A is all about business risks. Okay. So
yes,
if you're concluding with a risk of material misstatement and you're identifying and you're saying that, okay, fine, this will become a risk of material misstatement because it will ultimately misstate a certain balance in the financial statements, you're not, to the examiner, you're not pleasing him with your answer. Okay. Because we at this stage definitely need to understand the difference between business and FS risk. FS risk is the risk of material misstatement, right? You understand? Now, remember one thing, and I'll, in fact, tell you the trick over here. Whenever you read the information, okay, and if you remember over here, sorry, Exhibit 4 is on key financial information, comparative financial information. All right. Each and every piece of information, probably depending on what, to what extent the financial information has been given to you in the question, every piece of it can be corroborated by the financial information. And the examiner really loves it if you use the financial information to, let's say, identify a particular risk as well. So when you're done with the main exhibit, which has all the requirements, always skim through the question. Skim through means just look at what the headings are about. So request by the audit committee for additional services. Probably this does not have any business risk implication, right? But financial information, if you see, always remember one thing, guys. Please perform basic analytical procedures. Just compare. Revenue has increased. Operating profit has decreased. Operating margin has decreased, right? Earnings per share has decreased. Net cash flow, negative. Previously it was positive. Research and development cash outflow in the year has increased. All right. Total development intangible asset recognized at the year end, 50,000, previously to 48,000. Okay. Total assets have increased. Gearing ratio has decreased, right? So just a skim through of the information. That's all. Okay. Nothing more than that. But that's not the only way of skimming through the information. Okay. Guys, look at this. Their main business is to sell what? Drugs, medicines, right? Medical gels and drugs, right? So medicinal drugs I'm talking about. Okay. So the point is, in such a business, which is pharmaceutical business, this is the key. You know what the problem is? Remember one thing, at this stage, I can't dictate the answer to you, but I'm going to tell you the points that probably you will not be able to identify. At this stage, at the beginning, you won't be able to identify it. But as you go on and you do more practice, there will be a time before the exam, certainly, in which, you'll definitely identify such points. If you're incurring an expense towards research and development, all right, don't you think this expense would also include the salaries and wages of the doctor and the expert staff? Yes.
Yes, it will include.
All right.
It,
Because that's
it
not
might
administrative expense. Remember this. It is a research cost. You're paying your doctors to do the research. Without them, you cannot think about doing the research. All right. So that's part of research cost. And remember that the competition in the market is making you or other companies retain their expert doctors at a higher level of salary package. So there is a possibility that the increase of 200,000 could be, I'm not saying it has to be or it could be because of you paying more money just to retain your doctors. Number one. Number two, if you're doing some research over the period of years, let's say in this case you just have 2 years and you have one projected and one actual, right? If you're doing a research, let's say, and ultimately you're not producing something out of it, and you just keep burning cash, and you keep burning and burning and burning, ultimately does not produce anything for you, or just a little bit of revenue, do you think you'll be able to survive as a company in the long term? Guys, you think you'll be able to survive in the long term as a business? No. All right. If you're burning out a lot of cash, which is producing nothing for you, then that means you'll probably burn yourself to the ground faster than you thought. You're actually the actual rate is basically. Okay. So the thing is, there are certain things that help us understand the structure of the business and the risks associated with it. So research and development over here, if you see in the previous year, if I let's calculate it. In fact, R and D, 2,800, revenue 38,000. That's 20x3, 20x4, which is the projected. The spending that you're doing, the amount that you're spending on research as a percentage of revenue has not changed. And you claim and you tell us that there's a lot of competition in the market. A lot of new companies are bringing in huge amounts of research expenses, research budgets, and you're still there. You're still stuck at 7.5, 7.4%. What if your research does not pass through? What then? You'll lose the revenue. Don't you think they'll lose? What if they don't? Okay, fine, basic. What if they do the research, they start developing a product, but they don't get the license to produce or sell it? That cost has gone to waste. That cost will go to waste. You understand? Guys, pharmaceutical industry is one of the highly regulated industries, okay? So you need to factor in the risk of not getting the license to produce or sell the item over which you've done or over which you spent a lot of budget in terms of research and development. Get it? So let's say I'll call it developing drugs to be licensed for use. All right. Failure to get license for production or sale. That could be the first point. All right. What else? Failure to get license production sale. I've told you the entire story behind it. How did I come up with this point? Okay. What else? Any suggestion? Don't you think that there might be a risk of, let's say, okay, fine, I'll read this point for you. It says 4 new drugs are in the research and development phase. Drugs have to meet very stringent regulatory requirements prior to being licensed, production, and sale. Research and development involves human clinical trials, the results of which are scrutinized by the licensing authorities. It is common in the industry for patents to be acquired for new drugs, and patents' rights are rigorously defended, sometimes resulting in legal action against potential infringement. What is infringement? Can anyone explain infringement to me?
I think it's stepping on other people's business.
Illegally.
Or maybe violating their rights.
Exactly. You can say that illegally.
Yeah.
Avoiding, or you can say neglecting or avoiding the legal boundaries around what protects the intellectual property of a business. All right. So if the patent is being infringed, that means you're actually, let's say you don't have the license to produce a certain product because someone else has the patent for it, and you still are producing it and trying to get a license for it in some different country, and you want to sell it. Okay. That could lead to patent infringement. You understand? So like I said, there are different points. There are various things that can become a potential risk over here. Okay. So can I say patent infringement is also one of the business risks? Yeah.
Yes.
Yes.
Can you explain why did I say that? Because it has a huge legal cost. All right. And if you're incurring your costs towards just defending your rights as a result of one patent or 2 patents, I believe you're wasting your money. When will you get the time to develop the product, the product that you have the right for as a result of acquiring that patent, if you're just putting your costs towards defending that patent right? You understand?
Yes.
Are you sure? So for Conolly company, it's a risk on both sides. They might enter into a patent infringement. They might copy someone else's, or they might start producing someone else's product, and they can be sued for it. Or someone else can start producing what they are doing, and they have the patent right to do it. And they'll have to protect themselves by suing them. So in both ways, it's a cost that I can see being incurred, and it's a huge one. So don't you think this is a business risk? Get it? What else? We talked about the scientists, the doctors, right? Over here, they use the term scientist. And these people are scientists. No doubt about that. Okay. So don't you think highly skilled scientists having a high turnover with these people is a business risk? I'm losing skilled people. I'm losing people that, on which my business relies on for research, right? So loss of highly skilled scientists. Anything else that you feel should be from this paragraph written down? I can see it with, in fact, this should come later, because if you go in the ascending order, first paragraph, last point, read it. Read this paragraph that I've highlighted. Read this thing that I've highlighted. Once launched, products are heavily advertised. Fine, that's not a problem. Every business advertises their products. They should technically do it. But in some countries, television advertising is not allowed for prescription drugs. And I've practically witnessed it. I have practically witnessed it. That's why I know it's a business risk. It can bring your business down so fast, you cannot even imagine. Okay? So you can say advertisements, or you can say inappropriate television advertisements, because the restriction is on television, right? Get it?
Yes.
What else? Is there any other point that you feel can be extracted from it? No? Scientists, most scientific personnel have worked for Conolly company already, so that's the same thing. All right, next paragraph, next exhibit. Now, exhibit 3 says, in January 2024, Conolly company began to sell into a new market, that of animal health. This has been very successful, and the sales of veterinary pharmaceuticals and grooming products for livestock and pets amount to approximately 15% of total revenue for 20x4. Guys, 38,000. So from 40,000, 38,000. The difference is the increase is of just 5%. Just 5% increase. All right. Number one. Number two, it says this has been very successful and this is a new market. For them, it's a new market because it says in January 20x4, they started to sell. The year end is December. So Conolly company began to sell into a new market, that of animal health. You are with such a high level of competition already, in your existing market. You're entering into a new market now. Okay. And that too, you're saying that the sales of veterinary pharmaceuticals and grooming products for livestock and pets amount to approximately 15% of total revenue for 2024. That's huge. Your dependence on revenue coming from one stream, that too for the first year, is 15%. So if you eliminate 15% of this revenue, you take just 85%, you have actually, your revenue is actually fallen for the products that your core business is to sell. If you take 85% of 40,000, your revenue is actually fallen. Yes or no? Do you guys get this calculation?
Yes.
Next. Another success in 20x4 was the acquisition of the Cold Comforts brand from a rival company. Products to alleviate the symptoms of coughs and colds are sold under this brand. The brand cost $5 million and is being amortized over an estimated useful life of 15 years. Now, obviously, this has the element of risk or material misstatement. I totally agree, and there are other things which have risk or material misstatement as well. Okay. In May 2024, a contract with a new overseas supplier was signed. All the companies, okay, business risk. All is always a business risk. All of the revenue is coming from one customer. All of the supplies are coming from one supplier. All of the revenue is coming from one geographical location. That's always a business risk. All right. So first of all, it was business diversification. And remember, guys, what I'm explaining you is actually what my answer would look like. Whatever I'm talking about is actually my answer coming out of my mouth. I'm not writing it. Yes, that's a different thing. But whatever I'm talking about, what I'm speaking, it's my answer. This is something that I would have written in my answer for each and every point. Okay. Business diversification, and this was so let's just read the first point so that I can make a point out of it correctly. What was it? All the company's packaging is now supplied under this contract. Purchases denominated in foreign currency. Forward exchange contracts are not used. You're not even hedging your foreign currency risk. Okay. So supplier dependence. Foreign currency risks not being hedged. These are all the risks. Yes, we've identified more than 6, right? But the thing is that we can go on. It's just practice right now. In July 2024, a legal claim was filed against a company by an individual who suffered severe and debilitating side effects when participating in a clinical trial. Human trials are in some countries banned. Okay. Your license as a pharmaceutical company can get revoked because of this. You understand? Guys, do you get this?
Yes.
All right. Now, this appears to be an isolated case and no other claims have been received to date. The company's in-house legal team believe that claim will not be successful, but it could take several years to settle, which could cause significant reputational damage in the meantime. So this also becomes a business case, business risk. The company has asked the bank to make cash. Okay, so yeah, as a result, the company is considering offering the individual an out-of-court settlement. The company has asked the bank to make cash of $3 million available for this. Look at this. Look at the current state. Look at the current position. They're not even, they're probably not even able to settle just a $3 million claim. Conolly Company has also asked the bank for an extension of $10 million to its existing loan to support the ongoing development of new drugs. Again, you can link this point straight with the first point over here, failure to get license for production or sale of the new drugs being developed. They're doing this development through loan, and that too from a bank. Okay, bank does not, you cannot ask the bank to settle for less. They will come for you if you're not able to pay them back, or if they even see that you're not able to pay them back, they'll come for you. Okay, so these are all the business risks that you could have identified. And like I said, whatever I talked about in each one of these risks is actually what I would have written if this were an exam. You understand this? Now, what I want you to do is, for risks of material misstatement, I want you to actually type your answers, be it on Excel. Try using Excel because it has some numbers as well. So use Excel, and I want you to send me your answers. All right, guys, remember one thing, any risk, the right way to answer it, identify, and I'm telling you the steps. Listen to me very carefully, okay? I, in fact, write it down for you. It's a 3-step process. Identify, impact, so you have to explain the impact, and you have to conclude. This is directly from the case, copy paste. Simple. This requires application-based knowledge. All right. And this finally is based on the point identified and its impact. All right. That's all. That's all you have to do for business risks, for risk of material misstatement, for audit risk, whatever it is. But remember one thing, guys, between the difference between the business risk and risk of material misstatement lies in the second part, impact. The way you explain the impact for business risk, it's a different thing. You talk about probably the going concern issue. You talk about the impact on business profitability. You talk about business losing cash. You talk about business losing its reputation. You talk about business losing its customers. You talk about business depending too much on suppliers. That's what you talk about. When it comes to risk of material misstatement can only be found in one subject matter, and that is financial statements. That's all. There's no material misstatement to be found in customers or suppliers or government, or it does not make sense. Material misstatement is only found in financial statements. So you have to link in risk of material misstatements, you have to link all your points to the impact on financial statements. And it's good if at any point in time, or if in any point you calculate the materiality and you explain to the examiner that since this amount, if you have a specific transaction to work on, let's say, you can calculate the materiality and you can talk about it. Okay? You understand this? Can I expect you to send me an answer for risk of material misstatement?